Gold sells off ahead of CPI numbers, and it's trying to hit that 13.15 level. Joining me today is Bill Baruch of iiTrader. Bill, good to have you back.
Thanks for having me on again.
So CPI numbers released this Tuesday, Bill, and pretty much in line with expectations. How do you see gold set up here? As we're speaking, it's trying to hit that 13.15 level.
Well, yeah, our major resistance is 13.15 to 13.17 area, and really the market needs to close above there to start getting some shorts on their heels. But the CPI data this morning, we have a small downtick from expectations, and what that means is gold is an inflation hedge, and if as inflation has been on everyone's mind, the Fed is talking about inflation, and really to see it a little lower than expected now it had helped gold move lower. But it's a two sides to the story. Now that if inflation isn't a worry, then the Fed may not have to have their hand forced a little sooner than expected, and raising rates. So at the same time as inflation, CPI coming out less than expected and moving the market lower, it's still supportive because it keeps the Fed on the back burner.
Bill, let's move on to the next big news headline of the day. Credit Suisse pulling back from their commodities trading after posting their biggest quarterly loss since 2008. What could this mean for the gold market here, Bill? It's not the first bank that we've seen pulling away from commodities this year.
We aren't too surprised. It's been a trend over the last couple of years with different regulations and capital requirements changing. So it's something that probably won't change. But it's also the different areas of banks have been spun off into different companies. That's something it's another story. And I do think it may be a trend that we will see continue.
Bill, how much do you think is linked to an interest in commodities? Are we seeing a lack of interest in commodities? Is that why we're seeing such a pullback from banks?
No, I do not think we are not seeing less interest in commodities. It's the banks have to operate differently as regulations change, separate what they are doing, and again, with the regulations changing, it's going to make it for the bank a tough time going forward with commodities with commodity trading and some of the risks involved with commodity trading.
All right, Bill, let's look at some key levels now for gold. What close do the bulls need here?
Well, again, the bulls need to get a close above the 13.15, 13.17 area to kind of get the shorts on their heels. But really, a close above 13.31 is what's going to move this market higher, or a close below 13.02 and 1300. Still, major support to the downside at the 12.88 and 12.83 level, and those levels need to be violated, and really to get the bears in control of this market and encourage further selling. We're in a range, and what this looks like to us here, and we're telling our clients, is this is similar to the April-May pattern where the market's consolidating. We anticipate that consolidation to continue. We don't see any big drastic moves ahead of October or for the next couple months. This is a great trading range. We're telling our clients this is a great trading range, and if you play the levels, they're and manage risk properly, there's money to make in this type of market.
Bill, do you expect more volatility up ahead here for gold? It's been quite a busy summer.
It has, and as different developments across the globe, whether it's Ukraine, whether it's Middle East, there's safe haven demand for gold, but we're seeing physical demand kind of taper off above 1330. So unless there's a further catalyst to push this market out, we do see the consolidation continuing, and again, great opportunities to play the levels. We provide our clients with levels every day to trade the market with, and if you stick to that, we believe that's a recipe for success.
Thanks so much, Bill. We'll speak to you soon.
Thank you.
And thanks for watching Kitco News. We'll have a full lineup for you this week, so stay tuned. In the meantime, email us at newsfeedback@kitco.com. Thanks for watching.